Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of the Talk in which we are going to take a deeper look on the quarterly earnings report for the aerospace, which recently formed into a new company. Earlier, it was part of the GE, the General Electric, but in the month of April, the GE separated, divided itself into three different public companies: the GE Aerospace, GE Varnova, and GE Healthcare. We are going to now consider one of these three companies, the GE Aerospace, which has the parental company's trading symbol GE, and other two companies which formed during this separation have been given different trading symbols with their respective names getting involved in it. The GE Varnova is GEV, whereas GE Healthcare is GEHC, and for the GE Aerospace, the original trading symbol stays as it is. The GE Aerospace is a well-known name in the aviation sector. It has been making the commercial flights engines for long, and there is nothing new about this new company, though it's a new vertical, a separate public company now, but it has been in this business for many, many decades and it carries the legacy. This is the case of value unlocking, where three separate companies have resulted in better, more focused, efficient companies. And I feel for the original shareholders, it is the case of value unlocking, and there is still room for these three vertical shares to continue to gain in the near term, at least, if not in the long term. Of course, the long term prospects are always going to depend on how these three public sector companies perform in their respective domain. As far as the path of G Aerospace is concerned, I feel it is quite ready to take off and take a flight for the future flight in which it is likely to touch greater heights, as it has tried and tested a very reliable ecospace. It has been delivering value to the shareholders, to the customers with its energy efficient commercial flights engines, and I don't really see any reason for these well-defined path to be in trouble in near future, or for that matter even from the medium to longer term perspective. I am quite confident that the GE Aerospace is likely to do well and deliver value to all the stakeholders involved in its operations. Now we go to the quarterly earnings report. This is the statement of earnings. You can see that the revenues for the GE Aerospace are on the higher side. There is growth of around 10 percentage point, where its revenues have climbed from US dollar 14.48 billion to US dollar 16.06 billion this time around. So there is a quite a substantial increase in the earnings for the aerospace on the back of these higher revenues. It has also been able to deliver robust net figures, though the net earnings are on the lower side, but then you have to also take into account the changed circumstances. But still, any company generating more than 1.5 billion in profit is going to be uh, a company which is going to provide value to its shareholders, and that is not really lost on its shareholders, though there is a significant reduction in the net earnings this time around, but that is mainly attributable to some key differences in these earnings report. as there is lower other income this time around, and that is explained in the note 19. Its EPS stood at US dollar 1.39 diluted. For the next quarter, that is the second quarter of this fiscal year, the forward guidance is of lower single digits growth, and the EPS is also likely to climb with operational efficiency contributing to better growth in the EPS than the growth which is expected for the revenue. The company's revenues are on the steady path of increase, and that is pretty much likely to keep this value unlocking as a great proposition for the shareholders. And even if you are a new investor, new trader looking at the future prospects of the GE, I feel you can be quite confident about its prospect. Of course, even if it is likely to continue to grow, you always want to take into account the possibility that there might be some unforeseen development which might push the pricing, the valuations lower. And for that, of course, we always have to keep in mind the risk reward ratio and the kind of losses which we might suffer if we get it wrong. So, taking that into account, you can plan for the strategies like buy on dips if the trajectory of the GE aerospace holds true in the coming days, coming weeks, coming months. Now we also have to consider its cash flow statement to see where the cash is being generated from and how that cash is being used. For the quarter ended March 31st, 2024, there was a cash inflow from the operating activity of US dollar 992 million, which is a significant change in comparison to the cash outflow of US dollar 259 a year back. Cash used from the investing activity is at US dollar 808 million. This is the cash inflow, whereas last time around there was cash outflow for the company at US dollar 1.79 billion. Coming to the financing activity, there is this cash outflow on account of financing activity, which is at US dollar 204 million. So all in all, there has been substantial rise in the cash pile of the company with total increase of US dollar 1.5 billion contributing and taking its total cash and cash equivalents to US dollar 21.29 billion from US dollar 19.75 billion a year back. So there is a robust cash and cash position for the company. With this kind of cash, it can always take advantage of the emerging opportunities, whether it wants to invest more in the R&D or in the marketing or in a related aspect of the business. It has enough cash on its books to utilize it judiciously and try to reap benefits out of that. Now we turn our gaze to the technical side of the story. So we are heading to the JForex 4, the trading platform from the Dukascopy Bank SA. This is the chart of the G for the short term where each candle period is defined at hourly. For the last couple of weeks, it has been a roller coaster ride for the G. But if you consider its price moves since the formation of three different verticals, it has been upward with the steady growth, taking it from 135 to 165, around 170 at one point in time. Though there was a sharp dip from 170 to 157, but from that level, it has rebounded equally sharply, and I feel this is a clear-cut case of value unlocking, and all you have to do is try to take advantage of this situation for your advantage. And the best way to do it, in my perspective, is to adopt a buy on dips approach. So whenever there is correction and the consolidation after that, provided the formation of higher highs and higher lows stays intact, we can indeed take newer trading positions and try to capitalize on them, as there is this strong possibility of it continuing to move higher and higher in the near term. So for next few sessions, I feel that if there is the newer swing high formation and in the next correction as and when it happens, you can go for a buy on dips approach provided this prior swing low of around 158 to 160 holds and there is stabilization close to this support zone. In that kind of scenario, we can always go for newer trading opportunities. From the medium term perspective, the things are also promising on the medium term front. Here also the formation of higher highs and higher lows hold in leading up to the split of the company in three verticals, three separately trading public companies. We had these 50% growth from around 120 to 180 real fast. The stock climbed this much in the couple of months. After these three verticals came into picture, there is this deep, but that's simply the case of subtracting the price of other two verticals. So there was no any negative development as you might first infer from the cursory glance of this chart, and it has been able to hold its earlier momentum prior to the separate listing. The valuation of the company was going up and up, and the same trend is holding even after the release. So I feel that in the coming days, the price level of around 140 to 150 is going to be key price area to watch out for. As long as the price holds above or close to this price zone, I feel that we can continue to adopt buy on dips approach while expecting the climb towards 180 or even beyond that in coming weeks, if not in coming days. So from medium term perspective, the outlook is pretty much bullish and is in line with the outlook we have for the short term. Changing to the long term using weekly as the candle break time frame, we have seen that in the last couple of quarters, last couple of months, the valuation of the GE have almost tripled. If we count its movement, is the lower lowest point of second half of 2022. In last 2 years, its valuations have almost tripled from around 60 to 180, and still on the current levels, it is having bullish tendency. So I feel there is this strong bullish momentum in place, and unless we have any new development which might force us to change our view, I feel we can go with the flow and try and take advantage of this bullishness for the General Electric stock, and for that the immediate swing high of around 120 becomes important as it's likely to play out as a support zone in the scenario that there is a significant decline in the share price of the General Electric from the current valuations. Even in the split, we saw that its valuation dipped from 180 to around 135, and the climb from those levels to the higher side has been quite fast. So, in this scenario, there is this bullishness in the G electric stock from short term to the medium term to the long term. So in all the three different time horizons this time around, the outlook is similar. This is not really the case most of the time, but there is a unique scenario here for the GE Electric, GE Aerospace, where we have these three different time horizons aligned and moving in tandem. So all you have to do is decide which time frame you want to work with, and then accordingly you can plan your trades. So that's all from my side for today's session of Daily Stock, in which we consider these price moves of the G Electric, and these price moves are bullishly inclined from short term to medium term to long term, and I feel the advantage can be taken while adopting the strategies like buying on dips. So that's all for today's session. See you next time around. Till then, good.